Hi guys, welcome back. Myron here. I'm so glad I was able to finish my work today on time so that I can film this video and share with you some of the investments that I've done as a fresh graduate living in Singapore. Hopefully I can actually do a follow-up video every few months to show you how I rebalance my investments. Quick disclaimer, I'm probably going to say this many times during this video. This is not financial advice. This investment portfolio is actually suited to my own personal risk profile and financial goals. So what I hope to achieve out of this video, right, is that you have an indication on how you can save and invest. Hopefully learn a thing or two in this video. So we all know in March 2020, the stock market actually crashed due to COVID situation around the world, and subsequently the global stock market actually rebounded quite significantly. And in 2021, there's a new set of challenges, including high inflation rates in the US, various different meme stocks like GameStop, and cryptocurrency having a good bull run in the last few months. So it might seem like the world is going crazy, and even in Singapore, resale HDB flat, which is public housing in Singapore, can cost upwards of $1 million. So I guess all these different events influenced how I manage my investments and portfolio, which I'll share with you later on. So one thing to note here, right, is that I earned and saved every single cent in the portfolio. I did not receive any form of inheritance or trust funds. I think this detail is important because it has shaped how I structure my portfolio and investments and how I look at risk in my investments. So without further ado, let's jump into the first holding I have in my portfolio. So the first holding I have in my portfolio is actually cash at 25%, and this includes my emergency funds. So I really can hear a lot of you saying that, wow, 25% is very high, cash is trash, you put in a savings account, you don't earn much, so on and so forth, right? So the reason why I did that, right, is because in the next few years, I'll be getting a property in Singapore. There's actually a few large expenses that is normally associated with it. For example, renovation costs, and soon after your wedding costs. So that's why I wanted to hold a little bit more cash. But of course, if the market actually crashes or if there's a big correction, I don't rule out actually using this money to do some investments. So in the meantime, for this money, I actually put it in high interest savings accounts, for example like Singlife and Singtel Dash. Let me know if you would like a review for all these different short-term investment accounts. Find that, right, there's actually a lot of changes in like the interest rates, and when you go deeper into it, there's actually a lot of nitty-gritty details like how long you can take to withdraw. Not all of them are instant. Some of them take like 2 to 3 working days for you to get your money. Some of them require you to download a certain app. Some of them don't have any customer service. So let me know if this is something you would like to watch by tapping the like button and also commenting yes in the comment section below. So one thing about all these high savings account, right, is that the interest rate always changes, and I find that a lot of people on forums, they are trying to hunt for like the best possible deal. Nothing wrong with that, but I find that a lot of times the cap for this account is like 10-20k, and a change of 0.5% interest rate, right, actually adds up to about $50 a year, which is actually not very significant. So what I personally do is that once or twice a year, I will do a review on where I actually put my emergency cash, and I will do a rebalancing for this 1 to 2 times a year, and not care about it for the rest of the year, so that I don't find myself chasing these 0.5% returns. And when you shift money here and there, it actually takes a lot of time and energy out of you as well. So this is something I personally do, review every 6 months. So next time in my portfolio, I have 40% held in stocks, both US and Singapore stocks. In Singapore, I buy mainly dividend generating stocks held in my CDP accounts, because last year in 2020, a lot of them are actually on sale. And the good thing about dividend stock in Singapore, right, when held in a CDP account, is that all of its dividends is actually directly transferred to your bank account, something similar to this. So it's actually a very fast, free method of generating some form of passive income. In my US stock, I actually hold a lot of growth stocks, high conviction, that will at least 5 to 10 times my money in the next 10 years. So these are typically stocks that has a global impact, provide a very valuable service, and have a very good and strong economic moat. And these are the stocks that I'm okay to hold even though they correct by 20-30%, because I have high conviction that in the next 10 years, they will easily 5 to 10 times their market price. So although I like to invest in all these different individual stocks, I find it that it's actually quite time intensive to read up all your balance sheet for the accounts and follow the earnings report every quarter. And most importantly, to find a conviction to hold when the market corrects itself. So next up, I have my index funds. Okay, so next up in my portfolio, I have 30% that is in index funds. So the index funds that I hold are largely US technology stocks, because I believe that technology is here to stay. So imagine if tomorrow Google actually ceased to exist, right? All the drivers, and when we want to navigate, we are not able to use Google Maps. How much of an inconvenience would that be, right? So I chose to invest in ETFs as compared to mutual funds, because ETFs typically has a lower management fee compared to a actively traded mutual fund. Many studies have already shown that although mutual funds are actively managed, a lot of them, they actually don't beat the market broad-based index anyway at the end of the day. And another point to note is that mutual funds actually have a higher management fee. A small difference in management fee today will actually lead to a great difference in your returns later on, because for these investments, we will likely be holding for like 10, 20, 30 years, 40 years, even into retirement. So this is why I chose to invest in broad-based ETFs that are diversified in a large number of companies, right? So for example, your Nasdaq, your S&P 500, and certain passively managed ETFs. So while we are on this, right, there is actually a concerning trend whereby if you look at like TikTok, so many videos just telling you to say that, you know, invest in a low-cost index funds for the next 20 years, put $200 a month for the next 20 years, and you can retire a millionaire, right, without thinking. So although there's some truth to that, right, I find that when we follow this kind of advice blindly, what we lack is actually the conviction. So when we look at last year during March 2020 crash, right, there is a correction of about 20-30%, right? Can you actually take this loss, or can your emotions actually take this loss? Because many people actually do sell off due to the fear, and it's not a fun experience, right? Let's say you have 100k invested in an ETF, and from 100k you're down to about 70,000. About 1 year income is 1 year salary is gone. So I find that education is very important in this portion, whereby you understand that in the long run, your stocks, your ETFs will continue to trend upwards unless there is a significant change in market trends. Okay, so the next part of my portfolio, I have 5% in cryptocurrency and various different commodities like gold. Last year in 2020, right, there is actually a lot of uncertainty due to the COVID situation, and the US Federal Reserve actually wanted to do quantitative easing. So this fancy term, right, essentially what it means in a simplified manner is that they print money to try and stimulate the economy. So with that, right, you can see that there are various different headlines to talk about how much the US has printed, how much inflation they expect this year, okay? And this is why I wanted to diversify away from any currency backed by US dollar and to purchase cryptocurrency like Bitcoin and also commodities like gold and silver. But of course, one thing to note here, right, is that cryptocurrency inherently is very risky. Whatever money I have inside, I'm prepared to lose it all if it happens. Due to the bull run in the crypto markets for the last 1 year, right, my crypto holdings actually increased quite a fair bit for the last few years. So I recently actually just did a rebalance back to 5% so that I don't take excessive risk in the crypto market. This is my portfolio, and in summary, I have 25% held in cash or cash equivalents, 40% held in US or Singapore stocks, 30% in low-cost, broad-based exchange-traded funds, and 5% on cryptocurrency and various different commodities. Of course, my portfolio changed from time to time due to different market events, market trends, and also my personal life events. So if you would like to be notified when I release my future review videos or even videos similar to this, do subscribe and hit the notification bell so that you will be notified when I have these future videos. Thank you for watching my video. I hope this has added value to you as much as possible without me going into like the teeny-weeny details of what are the specific stocks I hold, because I think that's a little bit too personal and it will take up one whole video on its own. Thank you for watching, and I hope to see you in the next video. Cheers!